Hi, friends. Welcome you back to our financial planning series. Today, I'm going to discuss about one of the most wanted topic from your side, which is how do I select a mutual fund? Because this has been a source of confusion for many of you. Many are not able to select a mutual fund and start your investing journey. In fact, when I started doing my analysis on this, I found that there are more than 600 equity mutual funds which are there. So, selecting one out of the 600 can become a difficult task for most of us. So, in this video, we are going to talk about certain pointers which will help you in selecting a mutual fund. I'm going to tell you certain critical pointers that can finally help you in deciding certain mutual funds which can help you in long term wealth creation. As I've always advised in our videos, please focus on mutual fund investing rather than trying to do direct equity investment or trying to do some trading activity or FNO activity. Mutual funds is something which can help easily in long term wealth creation for a person. First thing is, there are multiple categories of mutual funds. This is only on the equity side. You see a overall total 680 mutual funds are there, and these are only the equity oriented mutual funds. Apart from this, you have debt oriented and other categories there. In equities, we have so many categories. I can broadly classify them into three sub segments. One is sector based mutual funds, which is infrastructure or technology sector. Second is theme based mutual fund, thematic consumption, which are high in dividend yield, which are consumption based, which are your uh, PSU or ESG. So second is theme based, and third is based on the size of the companies. Certain mutual funds invest in small cap mutual fund, certain invest in large cap mutual fund, certain invest in mid cap mutual fund. What we believe is that you should not try to get into sector based mutual funds or theme based mutual funds, because sector or theme based mutual funds can give you healthy returns when that sector is going through a up movement or when it is in a bullish kind of a scenario. For example, IT sector as of now is going through some bit of challenges. That is what I could see when you keep reading. So if you are invested in a technology sector mutual fund, what will happen is, if you see here, historically it's given a very healthy return, 10-year return of 20% or a 5-year return of 25%. But today's investment in this sector may not yield you results, because what will happen is this sector is likely to go through some pain point over the medium term. So sector based mutual funds can have those challenges. So you should ideally get into your large and mid cap, or large cap, mid cap, multi cap, or small cap, or your flexi cap. The investments which happen through across multiple sectors, but it happens based on the size of the company. Certain companies are called large cap, certain companies are called mid cap. Your large cap mutual funds are considered to be relatively lesser risky. Small cap are considered to be of high risk. So if you see high risk, they also give very high returns. 30% returns came here for a 3-year period. Here the return was only 16%. So first you need to decide is which category of mutual fund you want to invest. Our advice would be to invest in flexi cap, large and mid cap, multi cap, small cap, all those mutual funds which are categorized on the basis of the size of the company, and your investments will happen across sectors. Okay, then I'm going to talk about the filters which are there. So the first filter I've already told you. You can decide any other filter also. These are historical average returns. You can get these returns in Value Research online website. I have taken these returns from this website, Value Research online website, where I have taken, these are the current returns. My PPT has the returns as of August 1. I had pulled out the data on August 1. So these are the returns of August 1, but you can take the returns of any date. So there are certain filters which we have thought. If you consider these filters, you will be in a position to bring this number of 600 down to a very less kind of a or a manageable kind of a number. So decide the category you want to invest in. We believe that whichever mutual fund you are investing, it should be at least in existence for a minimum period of 3 years. Don't invest in any new schemes. If a mutual fund is coming out with a new scheme, let's analyze the performance at least for a period of 3 years. Once you analyze this performance over a period of 3 years, if the mutual fund is doing well as compared to certain benchmarks and certain filters which we have, then it is possible for us to start investing in that mutual fund. So minimum period of 3 years of performance should be there. Another filter we apply is asset under management. What will happen is, asset under management is the amount of money the mutual fund is managing. We believe that there should be a minimum AUM of 1000 crores. In case the asset under management is less, what happens is the performance of that mutual fund will have a lot of volatility, because they don't make any sizable investments in companies. They have lesser asset under management. They may try to do a lot of buying and selling as well, but when size increases, the stability of mutual fund performance is also better. So next filter which you need to apply is, any mutual fund you invest, please check whether it has at least 1000 crore kind of asset under management. Then there are certain return filters which I'm going to look at. The return of that mutual fund should at least beat the average 3-year, 5-year, and 10-year category averages. These are the category averages. So it should beat the category average. If you are investing in a large cap category, it should beat the large cap category. If you are doing in a mid cap category, it should beat that category. So please ensure that the mutual fund at least beats the 3-year, 5-year, and 10-year category returns. These are objective filters. Once you apply this, I had applied this. From that 681, I ended up getting a list of only 39 mutual fund. When I applied all these filters, the 681 mutual fund list became a 39 mutual fund list. Then onwards, you can start analyzing that mutual fund little more. Analyze about the background of the fund manager, look at the expense ratio, look at the churn ratio. You can look at certain other filters if you want, and then decide on an ideal mutual fund. You should at least invest between 5 to 10 mutual funds. Don't try to go beyond 10 mutual funds. Also, if you can invest, at least have some 4 or 5 kind of a mutual fund. So from this list, you can drill down, and you can run this exercise once a year. So when you run this exercise once a year, you will know whether the mutual fund in which you have invested is doing well or not. If there are certain challenges in the performance of the mutual fund, maybe you may have to stop the investing in that mutual fund and start investing in some other mutual fund. Obviously, your investment should happen through SIP route. We always advise the investments to happen through SIP route, so that you are able to get the benefit of the fall in the market and also enjoy the returns, or whenever it is the top of the market, you also get excess returns. But when it falls less, you keep investing, because many a times what happens is the investment decisions go through emotion. So that emotion factor gets removed if you go through an SIP route. This is one approach which I've talked about, that you have 681 mutual fund. You apply these filters. You can download the data of all the mutual funds from the Value Research online website. After downloading, you can apply these filters in an Excel sheet and then get to know the summarized list of the mutual funds. So we had summarized it as 39 mutual funds. In that, to our clients, we keep referring certain mutual fund investments to be made that leads to long-term wealth creation for them. Other option which you have is, go to something called as passive funds. What is passive funds? Is investing in Nifty or investing in Sensex. These are also called as index mutual fund. This is a subset of large cap mutual fund. You need not apply any filter as far as index fund is concerned. Only two filters, simple two filters you apply. AUM of 1000 crores is there, and 3 years minimum period is there. Just look at that alone. Don't look at 3-year, 5-year, 10-year return, because the category average, the large cap category returns which you see will include index as well as the normal funds. So looking at the category averages will not really help. So you just look, because the return also don't deviate much. I've looked at the 10-year return. I think there were some 10 index funds which were there, or 5 index funds which were there, and the returns fluctuated between, I think, some 14.25 to some 14.96, some broad numbers like this. So whatever mutual fund you invest, it's not going to really matter when you go through a passive fund kind of a situation. So index funds can be preferred for investor if you do not want to go through the process of MF shortlisting. So the best index are Nifty 50 and Sensex 30. These passive funds for a 5-year period gave a return of 12%. I think 10-year the returns were slightly on the higher side. Active funds can give you more returns than this. So even a 1 or 2% increase in return obviously is better. So in case you want to earn more returns than 12%, then you may have to go through your expert advice. That is make your investments always in SIP mode. That is one advice which we want to give. Invest for a longer period of time. And if you want to invest in active funds, don't try to do it on your own unless you are able to apply the filters and then freeze on a category, or you can get back to any mutual fund advisors. They can help you. Don't invest through your banks because those guys don't have understanding. They just try to refer some of the mutual funds where they get extra commission. So you get into investment advice from some of the mutual fund advisors, and based on that you can make your investment. So very simple approach. Apply these filters which are there, your list will get refined, and in that you select some 5 to 10 mutual fund, or go through passive fund investing. Passive fund investing would also be better. I think, yeah, with this I'm kind of done with this. You can again comment your feedback on our videos and let us know if you want us to cover any other topic. Thank you, friends.